The fact that there are calls for home prices to fall 9%, 9% in 2025, when we just posted a positive 4.1, seems unlikely to me, because that's a 13-point swing, right? First off, you got to go from positive 4 to 0, and then you got to go from 0 to negative 9. That's just hard to do mathematically in 7 months. Alrighty, folks, it's time to buckle up. Redfin just released a report about the housing market, and it is official. The housing crash has started. Now, of course, if you follow this channel, you know I'm saying that very much tongue-in-cheek. But again, the report from Redfin is a sign that the spring selling season has been extremely weak. The good news is, you know that on this channel, we called that early. We actually called that late last year. So what did Redfin tell us that's going to lead to the crash bros and doomers singing a happy dance? Well, the first thing they're going to talk about is the fact that month-on-month data was negative. Month-on-month, from March to April, median home prices were down nationally. They were negative 0.1. Now, a couple of things you need to know about that number. First of all, it is significant. Why is it significant? Well, if you have studied real estate for as long as I have, if you follow Lance Lambert at Resi Club, you know that traditionally the spring months are where the most appreciation happens, and then it kind of weeds out later in the year. So the fact that we posted a negative 0.1 nationally is without question significant. It is just showing how bad this entire real estate market is for the year. Inside that number, they also highlighted particular markets that were down significantly in a month. For example, Charlotte, negative 1%. These are month-on-month numbers. Virginia Beach, negative 0.1 or negative 1%. Miami, negative 0.7%. Again, those three numbers are significant and are month-on-month. However, you and I know that we don't look at housing on a month-on-month basis. We look at it on a year-on-year basis. So when you can compare April of 25, which again was negative month-on-month, to April of 24, year-on-year comparison, guess what? National home prices were up 4.1%. Now, again, a couple of things about this number. It is significant. It is important. That positive 4.1% is actually the slowest number, the slowest appreciation in the last couple of years, slowest since July of 2023. However, inside that number, we still had markets up significantly. For example, Detroit, Philadelphia, both of those markets were up 12% year on year. So what does all of this mean? Well, it means that my calls early in the year are likely still very accurate. We are going to have historically low transactions, sub 4 million. And with interest rates now over 7% today, the second half of the year is going to be very, very slow. We are going to see some markets go negative. We are going to see some sellers take their houses off the market. We're going to see active inventory grow. What we're really going to see is days on market. Days on market are going to explode. The last thing that these doomers and crash bros will need to learn again is something called price elasticity. Price elasticity. What does that mean? That basically means that prices are sticky on the way down. And again, this is not to say that the housing market can't crash, can't fall. I've never said that. I've always had a challenge with their timing. Their timing is off. The fact that there are calls for home prices to fall 9%, 9% in 2025, when we just posted a positive 4.1, seems unlikely to me, because that's a 13-point swing. right? First off, you got to go from positive 4 to 0, and then you got to go from 0 to negative 9. That's just hard to do mathematically in 7 months, right? We've got, I guess, 7 months. So again, it is very interesting for me to look at. But again, Redfin did report a drop of negative 0.1. That is significant. That just shows you how slow the market is. On top of that, with mortgage rates now over 7%, again, we are seeing mortgage demand collapse. Mortgage demand for purchases and refis collapsed 5% week on week. That is significant. Folks, we have learned on this channel, and I've shared with you for 6 to 9 months, 7% mortgage rates are just a red line. When we go over that, and then you layer in uncertainty and all these other things, there's no transactions coming. Now, of course, no transactions is a joke, but the fact is that the demand on the sidelines will only grow. So again, that is a problem. On top of that, we have some potential issues with lumber and home builders. I don't know if you know this. We probably get this from the uneducated economist, but I actually read a report about soft lumber prices surging 23% in April. And if you don't know, Canada accounts for 85% of all soft lumber used in housing. So there is talk about tariffs on lumber from Canada, and if that comes through, that could be significant for the builders. I do want to shout out a couple of things that happened on the channel yesterday that you might have missed. We had a great conversation with Jason, who heads a single income family on a teacher's salary. Jason and his wife were able to build a real estate portfolio over a couple of decades that is quite impressive, has led to financial freedom. And I think there's a lot of you out there wondering if you can do it on a single income. Can you do it on a low income, nationally speaking? And I think it's fair to say that teachers are not the highest paid profession. So you should take a look at that. Jason's story was awesome. And then I had a live Q&A with the 3 guys from Deal Champs, Stratton, Jason, and Dean. We dug into the real estate market 2025, 2026. We talked about AI. We had some conversation about mistakes raising kids. It was really a live Q&A that went over many, many topics. Hope you enjoyed that. Hope you watched that. So again, lots of stuff going on. We did have some earnings that are worth talking about. Toll Brothers. Toll Brothers is interesting again to me because it's a sign of the high end, not the low end, not mid-market. Toll Brothers, once again, beat on top line, beat on bottom line. But you need to know that revenue year on year was down 3%. Palo Alto Networks, again, somebody I follow just to see what's going on in the software world. They're obviously a cybersecurity company. They too beat top line, beat bottom line, although they did miss on gross margin, which I thought was interesting. I don't know if you guys know who Klarna is. Klarna is a big buy now, pay later provider, and they've just indicated that unpaid debts is skyrocketing. Losses doubled in a quarter, up to $136 million in unpaid debt. I really never understood that model. I think it was a sign of the pandemic, buy now, pay later. There are people doing buy now, pay later for burritos. It's a crazy thing for me to think about. We also got earnings from Target. Target missed on top line, missed on bottom line. Net sales per store were down 2.8%. Again, not good at Target. Looks like Target also cut their sales outlook as retailer blames tariff uncertainty and backlash from DEI rollback. Canada Goose, a big luxury provider of coats and the like, pulled their full year guidance on macroeconomic uncertainty. It should be highlighted that Canada Goose beat top line and bottom line as well. The cost of money, cost of capital is going up, up, up. The 30-year is again above 5%. The 10-year is again above 4.5%. It is getting expensive out there. Lowe's reported they affirmed full year guidance. And then finally, TJX, kind of a discount retailer, beat top line, bottom line, and also says they can offset significant pressure from tariffs, which I thought was interesting. The ECB is saying the quiet part out loud. European Central Bank, saying there might be a fundamental regime shift going on where investors are rethinking U.S. assets. Folks, some people call this the sell America trade. I would just call it buy less America trade, because again, they're not wholeheartedly dumping, at least in mass, but what they're doing is they're taking their discretionary investment dollars and they are allocating net new dollars away from the US. So I don't think it's truly sell America, but it is buy less America, and that is a problem when you look at it en masse. I do want to highlight for you, if you're in the school community, the Ladies of ORAT accountability group starts at 8 a.m. Pacific. If you are out there and you want to join a community like that, we got you. The Ladies of ORAT go 8 a.m. Wednesday Pacific. Ray Dalio's in the news again. The Fed is in a tough spot and should not cut rates. And then finally, we will close with some speak from Fed presidents. We got Bostic, Hammack, and Moslem. I gotta go hear somebody say that, because I'm not sure I'm saying that right. We'll just go in the order I found them. Bostic, no recession in my current outlook. That's again Fed President Bostic. But uncertainty when households and firms will feel comfortable making long-term spending decisions. People are uncertain. This is a problem. This, again, to kind of Bostic's first point, this can lead to a recession. The longer that consumers and businesses stay uncertain, the longer they will not make investments, not make purchases. Fed President Hammack, firms are reluctant to release employees. That is an important thing, because right now there's been a lot of talk about the unemployment rate skyrocketing if a recession is coming, and right now companies are just holding on tight because it's hard to find and retrain if this thing turns around. Last thing from Hammack I noted was sentiment data about economy is concerning. I would certainly hope so. Oh, got one more from Bostic I slid in here. Sorry, I didn't group them together. Unknown how consumers will respond to another round of inflation. You're wrong. The answer is pretty well known. It's going to be demand destruction. This is another round of 5, 6, 8, whatever it is, inflation is going to lead to tremendous demand destruction. Finally, from Bostic, the U.S. economy is going to see a slowdown this year. And then finally, from Muslim, I must be saying that wrong. Businesses and households are holding back from decisions amid uncertainty. Again, folks, it seems to be very, very clear that businesses and consumers are not spending. The discretionary spending's not there. They're sitting on their hands. The question is, are we getting better? Is uncertainty lifting? Will the big, beautiful bill land? Will that reinvigorate? Will all of those things come? No idea. But as uncertainty lifts, as we go forward, we are going to see what the second half brings. Don't forget, folks, if you are a landlord or want to become a landlord, one of the things you will need is landlord insurance. And of course, Steadily, as you see in the upper right corner, is the sponsor of the Daily Financial News. Just go to their link in the description and get a quote, see if they help you. Worst case, they can't, but you never know. Maybe they can get you better coverage at a better rate, as they did for me most recently on a fourplex. Thanks for the $1,000 savings. That was appreciated. Folks, take care. We will be back tomorrow with the Daily Financial News. Take care.